Welcome back to another episode of With Sonar. I am Luke Velasca, and it is Wednesday at 4 p.m. and we are live. Thank you so much for tuning in, and hopefully you've had a good holiday week so far. It should be a short week, although some of you may be working. As we all know, freight never sleeps. But overall, we thank you for spending your Wednesday afternoon with us. And of course, I am joined by Kyle Taylor, aka Mr. Miami. How are you doing?
Thank you. I'm glad to be back. I thought it was Tuesday here for a second because of the short week, but it was a great 3-day weekend, and I'm glad to be back on to the data train and really getting back to the normal days that we're having here.
So did you go to Florida for the weekend?
I did go down to Florida for a quick little trip. Got to experience how the airport life is treating everyone. It seems no one really cares in Chattanooga.
Yeah. What was it like? I haven't been to an airport since probably late February.
It was good. So I'm very fortunate that my wife takes a lot of precaution, because sometimes I just don't seem to mind some of those. But she had all of the knickknacks down. We wiped down everything. The flight was a lot more full than I thought it was going to be.
Okay.
But the airlines were still really good. They separated us appropriately in the flight, and then also gave us everything we kind of needed to clean or stay as safe as possible. So it was very, very interesting.
So when you said separated, was it like nobody sits next to each other?
Yeah, so you're in groups, and then like every other row. So I didn't have anyone sit next to me.
By your wife?
It was catty. Well, yeah, to the side next to me, except for my wife. Couldn't get rid of her. But but yeah, so it was a row behind me.
So approximately 50% capacity is what they're flying at. Is that fair?
I don't know if that's the actual number that they're, what they're saying, but that's what it looked like. It was only about, we had plenty of room on that flight. They did say that there was a lot more ventilation, that the air gets circulated pretty quickly. So I got to learn a little bit on the pre-flight little tips that the captain was giving us. So
that's pretty neat. Yeah. It's been a little bit since I've flown, but I think it seems like a lot of these planes have been equipped to handle a lot of that. A lot of the cleanliness needs that have sort of arisen since COVID's really come to the public.
I mean, at the end of the day, it comes down to
as best they're able to, of course.
The air purifying nature of those planes, anyways, being pressurized and already circulating those. So, so it's just try to keep your arms in and keep your hands and feet in the plane at all times, and we'll see how. Hopefully, we're good to go when we get home.
There you go. Usually when I'm traveling, if I'm not by myself, I'm with my wife and my little boy, and usually we're just kind of running him up and down the aisles to make sure he's not, disturbing the other passengers. So,
is there a kid back
little
there?
Kids, you know what I'm talking about. It's like, that's mine, everybody. Sorry, but he's no, it's okay. He's usually he's okay. Just
but you're going for number 2, right?
Yeah, I have number 2 coming up. Wife's due in mid-July, so. Of course, she would like to be done now, but we're excited. So I've got my little boy now; he'll be 2, actually June 15th, so just over 2 weeks from now. And then we're going to have a little girl.
Going to have a virtual baby shower.
I guess, I don't know. I'm pretty removed from most of that. I'm sure. For my wife, who is
you're not planning that yourself.
She is the planner. She has it all figured out. Me, I just kind of do as I'm told.
As you should. Anyways, but again, nice shirt.
Thank you.
It's back for the second week in a row.
Back for the second week in a row. I actually really like this shirt. It fits me very well. I know it's a test sample, but all in all, I like it.
Yeah, good.
And we need to get you one. Maybe if you don't love this design, maybe we'll come up with.
They're just trying to say they just can't fit that amount of knowledge into a shirt and that amount of just pure savviness. They just don't make a shirt for that.
Right.
So.
No, exactly.
But anyways, we are taking comments live today. So if you are watching, shoot us a comment as we kind of go through
Make sure your comments aren't too savvy.
Yes. and we'll definitely try to answer your question and really gear the focus towards some of the data. What are we really trying to look at today?
It's Memorial Day week, right? So it's a shorter week, and we saw freight volumes dip, which was expected on Monday. We knew that was going to happen. It happened this time last year. But interestingly enough, freight volumes, while they dipped, they didn't dip nearly as much as they did this time last year. Freight volumes are holding on quite well, actually. While it was about a 10% dip, 11% dip, it's again, the volumes were higher and the dip was lower, and they're already starting to come back up that we're seeing.
Right.
So that's a really good sign. Obviously, we'll see what happens when the numbers come out tomorrow, but for the most part, it appears like things are going to move back in the right direction.
Yeah, I think most people were really wanting this to be the catalyst of rates to starting to increase with the amount of volumes coming into the end of last week and still needing that on-time delivery of shipments and everyone, the capacity tightening because more trucks are wanting to be home with the family, and really a lot of companies are closed on Mondays anyway, so really tight delivery windows. And boy, would you hate to have to, have a layover for 3 days and wait till Tuesday to be able to deliver your goods. So definitely exactly what we're seeing, but I don't know how much of a catalyst it's really going to be. Coming back into the volumes from yesterday and today, we're seeing a good increase in tender rejection rates, but at the end of the day, we're still for the van market, we're less than 5%.
Right, but we are approaching that 5% mark, and we're sitting right around 4.6% and change. And that number, as that continues to rise, for those that don't follow, tender rejections measure the rate that carriers are turning down, or brokers for that matter, turn down their contracted loads. So it's what percentage of contracted loads are being rejected. We're sitting just under 5%. The higher that number goes, the higher spot market rates go. And generally spot market rates go up around the holiday because capacity tightens up as carriers want to be home with their families.
Right.
And we did see that, but we didn't see a massive surge. But we also didn't see a big surge in 2019 either. It was still relatively soft. We really had to wait until the end of 2019 to get that big surge in rejections and spot market rates. There was little bumps here and there throughout the summertime, the 4th of July, but for the most part, we had to wait until Q4 to get that surge. And it seems like right now, that's how things are beginning to act.
Yeah.
While they aren't, and it's sort of odd to say that we're all of a sudden beginning to mirror 2019, coming off of the crazy coronavirus volatility, but that's what's starting to happen. We're beginning to kind of settle in our shell a little bit. That's not to say volatility isn't going to pick up again. It probably will. There are areas of the country right now that actually are fairly volatile and experience things very different from the national average. The Northeast is tightening up in capacity right now. California has been tightening up, especially over the last week. So there are pieces of the country where things are acting a bit abnormally, where those tender rejections are well above that 4.6% mark.
Yeah, just like we always talk about, it's always down to market by market, identify what your densities and your network are, and be able to transition these key data sets to be able to help you identify how market is shifting, because we are still in a very volatile market, even though we're not having a lot of change week to week really that much, except for in certain regions. We're still looking for that identifier of when a rate's going to be coming up. That's the $1 million question that everyone wants to have answered. We see it all over the boards on Facebook. We see it all over LinkedIn. You see the mad gains. Cassandra Gaines brings in 2,000 comments really, all talking about how are people utilizing brokers? How are they what's the better relationship with the carriers and the shippers? So I think everyone wants that $1 million question, and it's okay. Well, how can I identify it better?
Right. And there's a lot to be said for that. If we can, go ahead and flash up on the screen the chart real quick. There's 3 charts I want to show everybody in Sonar. So the first one is what we just talked about. This is the overall truckload volume level in the United States. That blue line is this year. That's over the past month, last 30 days. So you can see here in blue, we've had a massive rise up in volume. Then we dipped. That is Memorial Day right there. That's your Memorial Day dip. This was yesterday, so we're already starting to rise back up. That green line is 2019 volume level. So again, we're above that. Beginning on the 13th, we started to rise above, is when we finally recovered above those levels. And then boom, there's their dip. So much greater than our dip from this year. So we're already above that Memorial Day dip from last year.
Yeah, and if you zoom that out a little bit, like exactly what you were saying towards the...
Let's look at 3 months.
What is it, the end of June? Or July?
Here we go. Let's look forward.
There we go.
There you go. So the blue line is 2020 year to date, and then the green line is all of 2019 volume levels. So you can see those dips there, and you can see where we're tracking relative to 2019. Now, let's go ahead and look at the tender rejections, though. We just looked at those. This is, again, over the last 30 days. Tender rejections are rising. There you go. There's that 4.61% number that's going up. This is largely going to track dry van. Reefer rejections are closer to, I think, around a little over 8% right now.
Right.
But for dry van, we're sitting right about 4.6%. We're on the rise, but we still have a long way to go. If we go back to where the coronavirus was, we were sitting over like 20%, but we've hit the bottom and we're headed back up, and that's going to drive spot market rates up. Now, we talk a lot about the million-dollar question: where are rates headed? Are they going to go up or are they going to go down?
Right.
Volume levels typically drive rates, or at least in part.
Right.
Right. As volume levels continue to rise, that's going to suck up capacity. This chart right here is what I'm keeping an eye on. This chart measures, this is year to date, 2020. This is how many imports are coming into the country, ocean imports.
Right.
70% of all truckload freight is on a ship at some point. So you're looking at basically 70% of truckload freight right here. It's coming into the country. We saw volume levels are typically track around the 45,000 mark, which is right here. That's where we were pre-coronavirus. And then they dipped down when China came offline. And then they surged all the way up as China came back online, and they tried to fulfill all those orders that they were behind on. But then the United States shut down and we stopped ordering supplies because now we have, almost 40 million people out of work now? That's less consumers buying things, which means less manufacturers need to make things, right? So now you're starting to see that those imports start to fall as the orders get shut down. Because it takes about 8 weeks from the time a manufacturer or supplier orders something in the United States to the time it actually gets made and shipped from China all the way to the door, basically, right, in the United States.
Yeah, and when you think about the warehouse inventory levels that are currently at all-time high from that big spike, all these companies that saw the surge occurring of COVID in these other countries starting to linger into the United States, got a lot of companies who were just really pulling forward, almost like what we saw at the end of 2018.
Yeah.
And so similar events happening really allows you to identify this and say, okay, how is the economy looking? I mean, especially once we see states or counties going back to I guess their initial phase ones, phase twos of how they're going to be opening back up the economy. Really, to identify that, I mean, the imports is going to be a great one to look at. And so if we see that more people are consuming freight, then we definitely know that there's going to be an increase in volume. But from an actionable reason, I think this is really good to see from a macro level. Now, you said the Northeast was starting to increase in volumes. What else would you also look at maybe to be able to identify price change?
Well, that's a tough one, right? So this is very macro. This is very high level. We can look at this at different ports, but that's really only going to tell us so much because at the end of the day, right, while Chicago isn't a port city, right, there's a ton of freight will still go through Chicago. So, it's just because there's a lot of freight that goes into the port of like New York, New Jersey, doesn't mean that it's going to be tight, right? So that's kind of where we need to think about things. And I'll get my earpiece working here eventually. But I've been telling.
It's okay. We're on the small screen here.
Yeah, we're on the small screen here. This is I'd be kicked out of the Secret Service in a minute because I can't get my earpiece working.
Yeah, no, you wouldn't have made the prereqs, right?
No, I wouldn't have. It'd be like, all right, excuse me, Luke, yeah, what's wrong with your earpiece?
Does your ears work well with an earpiece? No?
Yeah,
okay, well, you disqualified.
Okay, next. Yeah. I think the imports are going to be really, really great to look at from a high-level perspective. Obviously, tender rejections are going to show in more or less real time where we're at, and that's obviously very, very valuable. But I think you can also look at some higher level trends too. You can look at lead time. You can look at tender lead time. That's how shippers are reacting to the market changes. Right? If all of a sudden you see shippers in your market typically tender freight about 2 days before it needs to move, and all of a sudden it jumps to 3 days, something's happening. Yeah. Right. That's a good indication that shippers are starting to get a little frantic. Right. They're preparing for something. So that's that's a perfect opportunity to show you. Of course, you can always look at the FreightWaves forecasted rates, which are actually in some markets, not all, but in some markets are showing some softening coming up. It could be due to this. Markets that do heavily rely on retail to keep trucks moving. We'll see, but there's not a perfect answer. There's not a perfect science, but this is the main one that I'm
looking for any kind of leading indicator to help you identify that a change that's going to occur. And if you're only looking at one segment of the market, or one style being, okay, I only do contracted freight, so I really only want to worry about contracted information. Okay, well, you're not really seeing how the capacity on the spot market is going to affect your annual bids that you currently have out there. And then same thing for the spot market. Maybe we're companies that are only doing spot market freight. I don't need to worry about contracted freight or contracted information. And same thing about imports. I don't do any imports. So why do I need to look at that? And I think giving more people that holistic view of what the markets are doing will help you identify how to be able to hedge your risk a little bit better. Because, we're brokers, carriers are already razor thin margins. So one bad decision could completely change the outcome of your month, or whether or not you have all of your employees paid for.
Yeah, no, absolutely. And I think you make a good point. Why do you need to look at freight that doesn't involve you, right? Well, I think you need to, because at the end of the day, it all correlates together, right? If you move contracted freight, why do you need to look at the spot market? Well, if contracted rejections basically go so low that a shipper gets everything covered easily, eventually at some point it just becomes cheaper for a shipper to put the freight on the spot market than it does for them to move it at their contracted rates, right?
Right.
You need to know that. You don't want to lose that market share, whether you're a carrier or a broker, especially in times like today. You need to protect that market share. So knowing how the spot market may impact your shippers, right? Or if you are a shipper, maybe you want to know when the spot market gets below so you can save a little money, right? They are incentivized to save money. So, and on the flip side, right? If maybe you traditionally move a lot of freight on the spot market, maybe it is cheaper to move freight on the spot market, but then it becomes more expensive. Yeah. Shippers will go back to their contracted loads, right?
Yeah.
And I think that you have to understand the balance of all of those things and what's going to impact those. To make sure that you're always staying ahead of things in this ever-changing market.
Right.
Like you said, razor-thin margins. I think we were looking at some of the TCA data and the average OR for vans. I want to say it was in April it was over 100. It was like 110%.
Oh yeah, I think it's still right at about 105% right now.
Yeah.
And I know we're working on. Yeah, and we should have the April report. I know we were waiting on just a couple more companies to come in for that, but that's going to be a very telling tale of what these operating companies are, how profitable are they?
Yeah.
And we already knew they weren't that profitable. So operating ratios for being able to look at how much money do you have coming in versus the expenses you have. And so if you have a negative, you have more expenses than the revenue that's coming in from that load. That's how we get over that 100% operating ratio.
Yep.
And so we can't really work that way for long. So be very interested to see, are big companies going to start buying up other companies? You see all these big public companies that are shippers. The Walmarts, all these other companies that are deemed essential. I think Seth Holmes talked about it earlier this week or yesterday. Talked about, okay, it was great. These big companies somehow been able to deem themselves as essential, that they can operate, and the smaller business can't.
Yeah.
I feel like you're going to see the same thing with these larger companies that had the pocket, had the pay, the wallet to be able to get through this time, and we may have some consolidations.
I think you're right, and we've already seen that happen. We've already seen exits and pieces of larger companies get sold off and bought by other companies. So it'll be interesting to see if that continues to happen. But yeah, I think we're already seeing that. Something that we were going to dive into here. So on the screen, what Kyle and I were talking about earlier, this is the weekly tender rejection change in each market. Markets in blue are where tender rejections are showing the greatest increase over the past 7 days. This is as of yesterday. The markets in red are where tender rejections are showing the greatest decrease over the last 7 days, and then the white markets are relatively unchanged. So if you remember what I said, the Northeast, particularly Massachusetts and Connecticut area, is really going to be the area you're going to want to focus on, right? Notice how blue that is. I mean, look, Hartford's up 6%, Springfield's up almost 6%, Boston there is up over 10%. I mean, down here, look at California is up as well. A lot of blue here in California, as well as some here in the Southeast, minus Atlanta, the jewel of the Southeast. But outside of that, there's a lot of blue here in the Southeast. Things are rising. Things are rising. This is going to tighten capacity. This is going to increase spot market rates. As those rejections increase, that forces shippers to have to throw their loads on the spot market and put them out for bid. And they may not throw it on a public load board, they may throw it on their internal spot market, but nonetheless, it will go to a spot bid in some form as these rejections continue to rise.
If you're trying to think, if always try to put yourself in someone else's shoes. So I've always been on the brokerage side, so what are shippers thinking? And it's so smart for them because rates are so low right now to really push these RFPs back so that they can capitalize on the bids to be as low as possible.
Yeah.
So you might see some real pushback, and I'd love to hear from anyone out there in the social media sphere. How are you going to adjust how you attack an RFP now with rates being so low? I mean, yes, you want to bring in the volume. Volume's been king in the trucking market. Everyone's always willing to take razor-thin margins because I get 100 loads a week. Or 500 loads a week. I'm always willing to give up something in order to do that. So what's going to change now that price is at the lowest point possible? So very interested to see how companies are going to really start to elaborate that. And that could be from a number of different ways. Honestly, coming from a technology background, think, okay, well, can we make things more efficient? Do we try to cut out some back office resources that we had? Do we just maybe do things a little bit better on our pricing? Do we have to, hopefully bring in Sonar to our pricing team, so that we can't lose in this decision. So very interested because that's really going to start. We're going to see those RFPs really start to peak up.
Yeah, especially as they rebid, do the mini bids. I mean, it's all going to happen. I've been talking to a Fortune 500 shipper actually today, and they're entertaining Sonar right now. And one of the things that they were saying is they're doing more mini bids right now than they used to. Mm-hmm. They and he said, we'll probably end up doing over 10 bids this year.
Yeah.
That's way more than they typically do. Obviously, different segments of the business do different things, but he's like, we have an annual bid, and while we're keeping some of that, most of the volume is getting rebidded.
Right. You're gonna have extensions on those bids.
Yep.
So you talk to shippers of choice who really value who they're partnering with from a 3PL or a carrier perspective, and they're saying, I'll honor the price that we've negotiated as long as you don't increase that price when it's in your favor. And so we're going to see those kind of companies go to the wayside that did kind of increase those and then rebid, get new people in. So
it'll be interesting to see too what happens to a lot of the relationships. I've talked to trucking companies in the past that have been very reliant on their relationships to hold things together, and in some cases it works, but in many cases, if the shipper is in a situation, because a lot of folks forget these shippers they're losing a lot of revenue right now.
Right.
Their margins are down, their revenue is down, and if they're in a situation where they have the opportunity to lower their price point, and that means that your 20-year relationship, kind of goes by the wayside, they'll have to do that, and that's happening. I was talking to a carrier the other day. It's a 250 truck carrier. Been working with these same shippers for over 25 years, and they're saying, I'm seeing my loads now on just public load boards that I used to always have. And it's just, you have to be able to learn to leverage this information to be able to make those decisions and get ahead of it. Right. So you don't lose that market share. Right. Because like we said, no market is created equal.
Right, and just another wagering point. If you don't understand the market trends and what's going on in the market, how can you know that you're doing good business? Okay, or from a shipper's perspective, how do you know that you're getting trucks out in a good amount of time? Okay, well, what's your average compared to what's the norm? You may not know it. You can only go off of what's your own historical.
Yeah.
So I mean, if you're saying, well, I did,
and the new norm is changing so fast now.
Yeah, our detention times, we cut 2% off 2% number of minutes each year. Okay, great, but you were still, 30 minutes above everyone else in the market.
Yeah.
So when you're only looking at your own historicals and just, okay, well, how much better did we do compared to last year? It's like, okay, well, where do you even stand in the market?
Exactly.
If you don't know that, then it's already a losing battle.
Yeah. No, 100%. Hey, do you watch any of the SpaceX launch today?
Oh, I've seen those suits though. I've seen the space suits.
I think we need to get some of those branded with sonar.
I need to buckle up here. Get it. We're gonna take you on a mission here. We're going to planets with sonar.
Planet with sonar. That's right.
No, yeah, that's actually very interesting as well, because coming from bringing the public sector and the private sector together. We have NASA and SpaceX all kind of coming to collaborate, and so very, very interesting time, especially hopefully this will give some optimism in the marketplace as well.
No, I think you might be right to that. It'll be interesting to see. Although it's a good partnership, and I think it'll help. Maybe drive a little bit of innovation. See if we can, kind of push forward some of the speed that a lot of these space tests happen. And we've had the International Space Station for forever.
Mike Tyson is more ripped than he's ever been. I mean, anything's possible right now. We're all working remote. like, what is going on right now?
It's really going to change the dynamic. Speaking of working remotely, right? So chances are we're not going to be going back to the office, certainly not this year. Many other companies have announced similar things. Microsoft, Google, Facebook, tons of other companies have announced that their employees will have the ability to work from home. My wife and I, we're in the market for a new car. She needs a new car, but I still have mine. And right now we're thinking, it's a good time to buy a new car, but do we really need a new car? Because mine is fine. We could get away with one car since, I work from home and we really only need one. It's not like I take one to work and then she has hers to, do whatever she needs to do with it. And
coming from a guy who only has one car with his wife, but I live a little bit closer to the office than you do. So not that we're going to be coming to the office very often, but you do come to the office daily, right?
Sometimes, not every day.
Yeah.
And if I do, it's usually only for like an hour.
It's the special perks of being the talent of FreightWaves, right?
Yeah. Don't throw the word talent around me. Everybody knows watching this. I don't have that title.
We'll leave that with the dude and all the financial gurus that are always dropping knowledge bombs here. On with sonar.
Yeah, the dude and Dooner, they've got the talent, and then you have like Seth Holm and some of those other folks that have like that research knowledge.
Yeah, the great quarter guys are.
And then there's us.
The best of the best.
The best of the best.
That we bring you guys. No, but to kind of tie all this back up together, I think the real message that we're trying to better understand is, how are companies going to have to pivot in order to be more automated? Automation could mean, I'm seeing some TMS companies have record months just because people are having to have more in the cloud software. And so, okay, now with that, how do we connect to our drivers easier? Everyone's working from home, or people had to furlough, lay people off. How do we work better with less? And so I'm very interested to see what collaboration comes out of this real dynamic of an event we're going through, this pandemic of an event.
Yep.
But I'm very interested to see how much automation really gets pushed in the transportation space, because it's already been pushed so much in the past 5-10 years.
Yeah, it's going to have to. Last month we had our best month of sonar for the year.
Yeah.
And it's not because we're amazing salespeople. It's because, which we are.
Yeah.
But it's because I think at some point it costs companies too much to not have this information, to not have real-time information at their fingertips to make decisions. If you're constantly making decisions based off of what happened, 2 weeks ago, well, the market's nowhere near where it was 2 weeks ago. We live in a whole new world by then.
Yeah, I do a really good job of tying all of this great data together in an Excel spreadsheet, and then, okay, I'm using data from 3-4 weeks ago. How's that going to help me with what's going on today?
Yeah. So. You're going to go out of business if you don't have it. Awesome. Well, thank you again. I know we're here at the end of time, and this is a good conversation. We're going to be here next Wednesday, the same time, 4 p.m., and we're going to be talking about these things. Leave us a comment below if you have questions about sonar or want to see more. Don't hesitate to leave us a comment. Otherwise, have a fantastic day.